What's up, everyone? It's Scotty with MoneyVest. So markets at a new all-time high. Congratulations to everybody with the NASDAQ here rallying over 1.4%, trading back up to 16,700. We've got the S&P 500 well over 5,300, up a little bit over 1% as well. And of course, the Dow Jones just a little bit shy of 40,000 points, up over 88 basis points on the day. I did pick up some IWM today because I do believe small caps have a ton more potential in 2024 going into next year as compared to the big tech and large cap stocks here. But nonetheless, we got lots to unpack. We got inflation numbers to break down and then also go over the technical analysis as we are hitting new all-time highs across the board. And volatility, of course, coming down to, once again, really, really low levels. We did see a couple days of spikes here in volatility, and now we're starting to roll over once again. So hope you all enjoy this video and find it helpful. Make sure that you drop a like. I would really appreciate that. Subscribe to the channel if you haven't already. The links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos. I will be posting part 2 of all the individual stocks that our members are asking for me to analyze. So I will be doing a separate dedicated video that's just going to be part 2, going over the fundamentals and quick technical analysis on those companies as well. So you get access to all the members only content, all the alerts, as well as the early access to the beta launch, which we are targeting June 15th. That's like the tentative date. I'm still working with the developers to get a definite date because we're working on the authentication with AWS to get their SES email service up and running. And once we get that on board, then we're going to do some testing, some final fixes. And this is going to be a work in progress for the next couple of years because we're going to be adding a lot more features, a lot more data, a lot more tools, and more upgrades over time. So this is never going to be a complete work of art here. We're going to continue to make more progress. So again, link's going to be down below. We'd love to have you on board, and we do have that 16% annual discount available until the end of this month. So this right here was a state of the market. Absolutely fantastic gains, higher highs and higher lows intraday. Making new highs here, new all-time highs for the market. So very, very nice gains. This right here were the CPI numbers. I was live to cover the entire numbers here. And of course, we'll go over the market's reaction as well. 0.3% month over month, year over year sitting at 3.4%. Core CPI month over month at 0.3%. And of course, year over year sitting at 3.6% as well, which again is a little bit higher than what the Fed's preferred target is of over 2%. And this right here were the PPI numbers, 0.5% month over month, coming in a little bit hotter than what the expectations were. Year over year sitting at 2.2%, and core PPI, excluding for food and energy, 0.5% month over month, and year over year sitting at 2.4% as well. So wholesale prices are accelerating a little bit back higher, and inflation eases as core prices post the smallest increase since 2021. Now, I want to be very clear about how the United States kind of plays these numbers. We know that it's a political year. So, the incumbent party is going to try their best to kind of help people understand that, inflation's coming back down. Inflation is back down. And, we're seeing price increases at their slowest rate since 2021. But look, this was a good print. I'm not saying this was a bad print. This was a good print. And this, again, continues to kind of reaffirm the possibility that inflation is indeed moving down. And the Federal Reserve is going to be more optimistic. And it's going to help them get their greater confidence that they're looking for potential rate cuts in 2024. So not taking away from the fact that this was a decent / good report for inflation. But I really want to help you understand how these numbers can be delusional, right? Because this is where we are. This is the rate that we just got. Maybe this needs to be updated because right now we have the March 2024 at 3.48, almost at 3.5%. And this is for inflation on a year over year basis, right? Year over year. This is the number that's quoted the most. This is the number that we are talking about in this report. At CPI at 3.4% on a year-over-year basis. Again, that number's come down. So from 3.48 down to 3.4 because of the April report that we just got. But the real question is, how are prices in general? Like, ask yourself, if you're watching this video, you're in the US, New York, California, Chicago, wherever you're watching from, even in Europe, ask yourself, how are prices doing? Like, are prices up or down from a couple years ago or 4 years ago? So that is going to be a much better metric here, which is the CPI. You can come over to Google Finance. This is public data that you can access. And this is the index that I really want to help you understand. This is the overall price increase in in the prices of goods and services. This is the CPI basket, right? The consumer price index, the overall basket of goods and services, and how prices have just climbed since 1970s. I mean, at that point, at one point we were at 40, right? So for this index level to be at 40, and now we're at an all-time high, a new all-time high as of April 2024, when this number is now sitting at 313.55. So that's the number where we are. This is a new all-time high. So in other words, to put things in context, prices of goods and services across the board in this basket has never been higher. It's never been higher. It's at an all-time high. Like for prices for eggs, milk, bread, food, rent, shelter, transportation services, oil, everything considered, everything that's part of the CPI, it's never been higher. It's never been at an all-time high. And really what I want to draw your attention to is the significant spike here since 2020. So you see that parabolic move. You can kind of see the angle of this increase. I mean, that's pretty stable inflation because prices in general should continue to go up, by 2%. That's stable inflation that needs to happen in a good functioning and growing economy. We also don't want to see deflation. We don't want to see prices going down because then earnings go down, unemployment increases, and that's a whole different mess. So we do want to see inflation. We do actually want to see 1 to 2% stable price increase over time. But this right here is what I have the biggest problem with, because prices are just gone up parabolically. I mean, this index has gone from like 250 to now well over 313. That's a 63-point increase in 4 years. I think we did the math. That was about 25 to 30% increase in just the last 4 years. Think about that for a second. The 25 to 30% increase has happened just in the last 4 years. So it's just the rate of increase that's been going down. That's just the rate of increase, the 0.3%, and then of course the year-over-year 3.4%. That's just the year-over-year number, right? But overall, inflation is still, in my opinion at least, is a problem because we haven't seen sort of stable prices. And ask yourself as consumers, are you seeing higher prices compared to 4 years ago or 3 years ago or 2 years ago? And the answer is going to be most likely yes. Prices for almost everything has gone up in one direction, and 0.3% is the month over month change. If you kind of break down some of the individual items here, energy prices month over month were up 1.1%, 2.6% now on a year-over-year basis, back to that positive territory. When you've got shelter prices down here, we've got 0.4% increase and 5.5% on a year-over-year basis, and then food was basically flat, so no change, but up 2.2% on a year-over-year basis, kind of consolidating and stagnating sideways a little bit. Now, this right here are some of the special aggregate indexes when you kind of exclude for certain items. And if you take into account all items less food, we're sitting at 3.5% on a year-over-year basis. That's about an 86% relevancy rate because food makes up about 13.5% of overall inflation. So once you exclude for that, 86% of the rest of the basket is seeing 3.5% on a year-over-year basis, which is a little bit higher. If you take shelter out, which is about 30% of overall CPI, so the relevancy is 63.8, we're now immediately down to 2.2. Right? So that just goes to show that shelter is indeed playing a big role in overall CPI. I mean, rents continue to be the bigger piece of the overall puzzle here. And if it weren't for shelter, we'd already be at 2.2%. So CPI, again, 30% is 36% or something, 36% is shelter, right? Is rent. So that's playing a big role in the overall inflation. Now, if you take food and shelter out, now we're looking at 50%, so half of CPI, also sitting at 2.2%. Then if you take, food, shelter, and energy out, that's about 43% because energy makes up about 7% of overall CPI. Now we're sitting at 2.1. And then if you take out food, shelter, energy, used cars, and trucks, everything about 41% of CPI, we're seeing 2.6%. So the idea is that none of these categories are down to the Fed's target. The closest we get down to is 2.1, which is 43% of the overall CPI bucket, and that's excluding for food, energy, and shelter. So core CPI minus shelter, and then we get down to 2.1%. So, the idea is that yes, the rate of increase coming down, right? We're seeing a slower pace of increase in overall prices. But a couple things that I really want to note here, because look, this is, if you're sugarcoating these numbers and the markets are celebrating these numbers, that's great. Like as an investor, these are great events, right, for the markets to break out to new all-time highs. And I'm sure everybody's portfolio was super green today and we had a lot of gains, but as a consumer we have to understand that okay, prices in general have gone up significantly in the last 2 to 4 years, and the rate of increase is the only thing that's slowing down. overall index is still hitting a new all-time high. Prices have never been higher than where it is right now. And then if you exclude for certain items, we're still well over, the Fed's target. So again, I want to give you both perspective here, both as a consumer and as an investor. As an investor, this is again great news because regardless of where the prices are, we're seeing markets break out to new all-time highs because of this optimism that rate of increase is slowing down. This right here, of course, is the index, and you can see how we have come down. This is just a year-over-year change, and that's what it's plotting on a line chart. The markets, of course, very green. NVDA pushing higher, Microsoft, Apple, Google, Meta, the entire semiconductor sector. And then, of course, we got healthcare moving higher very, very nicely. We had the real estate sector, utilities, everything green, mostly green. Tesla was down 2%. Amazon was down about 0.5%. But overall, the markets were very, very green with most sectors except for energy. Everything else was green and up. In the last 1 week, you can see significant recovery here. In the last 1 month, of course, all sectors in the S&P 500, all 11 are up. This right here, cocoa prices, cotton prices, you got orange juice, gasoline, everything pushing higher with oats, rough rice, natural gas, lean hogs, palladium, sugar, coffee selling off. And then we got Bitcoin here just over 66,000, and then we got Ether just over $3,000 as well. So very, very nice gains for the markets. And this right here is going to be the volatility summary. So we are back down to rare territory. So this has been actually quite volatile environment for the markets, from the FOMC, from Jerome Powell's speech to inflation numbers to unemployment numbers. And volatility, of course, has been knocked back and forth. If you come over to where the VIX is, we obviously got up to as much as 20, then we came back down to about 12, then we spiked a little bit to 14, and then we're back down because VIX was lower, down 7% yesterday, and we're back in this rare event, a rare situation, because markets are hitting new all-time highs and the VIX is back down to 12.45, and this is in the 13th percentile, folks. Again, if you come down to this spreadsheet, this is specifically what I've created to better understand how rare this market is with respect to volatility. And the best way to kind of read this is that if this index right here, if this percentile and the VIX rareometer is in the rare situation, if it's a rare reading, that means it is either time to be very, very cautious and be very alert for market pullbacks and drawdowns, or it is time to be very aggressive and start buying like there's no tomorrow, like start dollar cost averaging. And every time you get down to that rare sort of event, the markets do have that event where they do actually reverse in a very, very dramatic manner. So the fact that we're at 13th percentile just goes to show that volatility is back down to really low levels. And for those reasons, we need to be very careful. We need to be cautious here because of that negative correlation with the S&P 500. So again, if the VIX does spike to 14, 16, 18, 20 or higher, then that what is that going to mean? That means the markets are going to start pulling back and we're going to see that drawdown. So I actually wouldn't mind selling calls on the remainder of this week. So Thursday, Friday, I actually wouldn't mind selling calls. I wouldn't mind even de-risking a little bit, taking some profits off the table, considering where the volatility is at the moment. So we're very, very low. In fact, we haven't seen this low levels since March of 24, and prior to that, we basically December of 23 is when we were at the lowest level, and since then we have seen spikes here and there, and the markets have, of course, continued to move higher, but with dips and pullbacks of 2 to 3%. So keep a close eye on where the volatility is. Of course, the S&P MoneyVest Index now approaching 4. We are now at 4, folks, at the MoneyVest Index here. So you can see how aggressive this rally was. S&P over 1%, hitting new all-time highs over 5,300. So just keep a close eye on where we are. Again, this does not mean sell. It just simply means that I'm not aggressively buying. And buying, of course, levels are here at 2.38. And just to give you a very simple example, again, going back to the basics here, because, I do get a lot of questions and some comments on, oh, Caddy, you're always expecting for the markets to sell off, you're bearish or whatnot. But if you come over to, again, just kind of showing you the alerts, and the last alert that I basically sent out was, of course, this over here. So you can see that. Again, I mentioned this in one of my previous market updates as well. So again, this was the Monday buy alert. This was back in 4/20, April 20th, right? So right now I'm recording this video about May 16th. So just less than a month ago, picked up, $10,000 worth of stock. VUG, SMH, Apple, Tesla, picked up because if you come down to, again, 4/20, which was April 20, where was the markets? April 20 was exactly around this time. where you'll notice the money vest index was down to 3. It was down to 3. And again, if I show you where the S&P was, we were right over here, right? So April 20th. So that's been a very nice move to the upside. So if I come over to VUG, from those levels from April 20th, VUG has rallied over 9%, right? 9%. If you come over to SMH, same story, right? Since April 20th, it is up a little bit over 17.5%. If you come over to Tesla, April 20th, was quite literally this price point around here. It's up over 24%. And then Apple, if you come down from April 20th, was right around this time. It is up a little bit over 15%. So my goal, my idea with all of this is to provide you with the best risk-reward setups, best risk-reward timings on when it actually makes sense to be a buyer in the market, okay? And it's all documented, like it's all right here. Okay, so this is a lot of our analysis goes into the money vest index to kind of better understand that, okay, is it time to be aggressive, or is it time to be more cautious and be more relaxed and let the prices come to us? And right now I can tell you very confidently that this is not the time for me to be buying. This is not the time for me to be aggressive. This is the time for me to just sit back, enjoy the gains, sell calls against my shares, and de-risk and take some profits off the table. If it means I need to rebalance, I will. And again, we're approaching that level. We're at 3.99. So the higher this, of course, goes, the more cautious, the more alert we need to be, because it's getting more and more red. The moment we come down to some greenery here is the moment it's going to be time to, once again, dollar cost average and buy super aggressively. Like, I'll be here, I'll be making content, I'll be on Discord, I'll be sending out alerts, I'll be sending my updates. But the idea is patience. Let the prices come to you. And the last time when they did, we took advantage, and all the 4 buy alerts are now up 15, 20, 25%. So that's the whole idea that I'm trying to teach on the channel, is that you don't need to trade too often. You just need to trade well and understand, okay, when the risk reward is the best. Okay, going over to some of the individual stocks. Before we do that, crude oil prices continue to break down from this head and shoulders. A lot of consolidation sideways here. Resistance is going to be at $80, $81 a barrel. And of course, support level is going to stay put at $73, $74 a barrel for crude oil as well. Now, I'm also going to be implementing some other levered trades. So for example, TQQQ. So if it weren't for, let's say, VUG, if you were taking trades on TQQQ, for example, on 420, April 20th, which was the last low, this would have been up a little bit over 29, almost 30%. So that's the whole idea now moving forward, is that I want to combine the money vest index with leveraged ETFs, with levered trades, right? So that's going to be TQQQ, that's going to be SOXL, that's going to be TMF. There's going to be a lot of other levered trade ideas where we can take advantage of the index and kind of help us better understand the broader markets and the risk reward, and have very precise and very selective trade ideas moving forward, so that we can benefit from fewer trades but bigger, better opportunities, in a given year. So we may not take, let's say, 100 different trades in a year. We may only take 5, but those 5 end up yielding us, let's say, 30 to 35% on average gain. So that's going to be the idea here. Like, we're going to be more selective, more precise, and more high quality trades over quantity. So that's going to be the focus. And the next time the money vest index, of course, pulls back, our focus, my focus at least, is going to be on levered trades like TQQQ, SOXL, TMF, UPRO, some of those ETFs. So moving over to Apple here. So first of all, let's just quickly break down the markets, even though there's not much to go over other than the fact that we're just hitting a new all-time high. So S&P 500 breaking out very nicely. So we're going to go ahead and turn this level into a support, and we'll see how rest of the week we kind of end up trading at. Support level is going to be at 52.60s. Very, very nice breakout to new all-time highs. Same thing with the NASDAQ. Very nice breakout to new all-time highs here, and 16,470. So this right here is actually going to be that support level to watch for the NASDAQ. So very nice breakout to the upside to new all-time highs. Apple also recovering well, 189. So 190s are going to be the target. So here, that was their trade idea. 195, 196. I actually wouldn't mind selling Apple here at these prices, at these resistance levels. I also do think that Warren Buffett is also kind of exiting his position, not really completely exiting, but of course de-risking some of that Apple stock slowly and steadily. I think that's one of the things that large investors have to do, is in tranches and over time, so that they don't spook the market and they don't tank the market with the amount of supply they're bringing into the market here. Because Apple is one of the most liquid stocks in the world, but at the same time, given how much Warren Buffett owns, he can't dump it all at once. So he has to do it over time and in multiple tranches. So At 195, 196, I would consider kind of getting rid of my position as well, because valuation, I'm not really interested in Apple at these prices. As you already know, that I'm much more interested at lower prices and in the 150s, down in the 130s for Apple. Amazon, also almost near all-time highs. It kind of got rejected at that resistance at 188. So this right here is going to continue to validate as a resistance, as an area of supply, and support level is going to stay put at 171 for Amazon as well. So a lot of consolidation sideways, a little bit of a double top resistance for Amazon. So we'll continue to monitor this price for this stock here. Tesla, on the other hand, selling off intraday. It was higher, but then got sold off. Not a surprise. Resistance at 178, all the way up to 198, close to $200. And of course, a very strong support here down in the 150s for Tesla as well. Talking about PayPal, and PayPal here down 1%, getting rejected at $65. So this right here will continue to act as a resistance for PayPal, all the way up to $68, $69 per share for the company. And of course, support level is going to stay put at $57 for PayPal here. So a lot of consolidation sideways. This right here inside this green rectangle is going to be the level to keep in mind. And of course, resistance we've already talked about at 69, close to $70 per share for PayPal. Talking about Visa, and Visa here also moving higher very nicely, up a little bit over 1.3%. So resistance is going to stay put roughly around 282, as we've already discussed, and support level at 265. Very nice recovery from its RSI, MACD, and L3 banker oscillator here, given how oversold it was in the past, and we're seeing a very nice, decent recovery back higher, but 282 is going to be that resistance to watch. Talking about NVIDIA now, NVIDIA on the day also moving higher, near all-time highs. Earnings are coming up next week. Resistance all the way up to as much as 969, and as I mentioned this in my live stream, if you own at least 100 shares of NVIDIA, you better be selling calls, man. Like, you better be selling calls, guys and girls, because this is just an insane amount of premium that you are collecting each month by simply doing 15 minutes worth of work. You can be way out of the money, $1,400, $1,200 strikes 30 days out, and you're still getting, a couple $100, as much as $500, couple $1,000, depending on the expirations, depending on the strike prices. The premiums are very, very good on NVIDIA calls here. So you better be looking into how I can take advantage of that and sell calls against my shares to take advantage of those very, very high premiums. Talking about advanced micro devices, and AMD also moving higher very nicely, validating that support in the 150s. And kind of breaking outside of this downtrending channel of lower highs and lower lows, and resistance is going to stay put at 164 for advanced micro devices. So that is going to be that next target. And of course, support level is going to stay put inside this green rectangle in the 150s for AMD as well. Talking about Meta platforms, and Meta here also moving higher very nicely, breaking out from its area of supply. So we can go ahead and turn this level back into a support for Meta. So this will be turned into a support here. Next resistance and target is going to be all the way up to 518 to 520 for Meta. And again, like I said, support level is going to stay put at 468, 470 for Meta as well. So that is going to be that next target. Netflix also pushing higher after this breakout, consolidating sideways. Resistance is going to stay put at 637, with the support level staying put at 596, 597 for Netflix at the moment. And Google here also moving higher, back up to almost new all-time highs. Resistance is going to stay put right over here in the 173, 174 range. Got a little bit of a gap to fill with a massive support in the 150s for Google. Microsoft, on the other hand, also breaking out from this resistance. We're going to go ahead and turn this level into a support now. And the next target and resistance is going to stay put roughly at 430 for Microsoft, with the support level, like I said, at 417, down to inside this green rectangle in the $395 to $400 for Microsoft. And finally, we come over to Enphase. Also had a beautiful day, down about 1.4%, getting rejected at this lower high. So this right here is the downtrending channel for Enphase that it continues to validate with a massive support and a lot of demand here in the low 100. So 107, 108, a lot of supply. A lot of demand and a lot of support at those levels for Enphase. And finally, we come over to Costco, which is up another 1%. So it did see a bit of a pullback from that resistance, and now coming back up to that resistance again. Very, very overbought, so I'd be very careful with Costco at these prices. So hope you all enjoyed this video and a complete update on the markets. Congratulations to everyone. New all-time highs from the markets, and of course, a lot of individual stocks moving higher very, very nicely, 5, 6, 7, 8%. lot of momentum. So but again, just keep a close eye on where the volatility is, keep a close eye on where the money best index is, because they are really going to provide us with some opportunities in the future when the markets do end up, let's say, pulling back, and let the prices come to us as always. Make sure that you drop a like, subscribe to the channel. Links to our Discord and Patreon is going to be down below if you're interested in joining us. And happy investing, and I'll see you all in the next video.